Hello everyone, happy Sunday. In today's video, we're going to explain to you guys how we caught the top of the market absolutely perfectly, how we made over 300% gains on multiple trades, why I was bearish this entire time, and I'm also going to explain what the next steps are for the market. Are we going to continue falling lower? Is this a dip buying opportunity for new highs on the SPY? In today's video, I'm going to talk about all of those things. So thank you guys for all of your support. Please make sure to like, comment, subscribe if you enjoy the content. And without further ado, let's get started with the video. All right, so I want to set the landscape off by first talking about Google and ChatGPT. So as we know, Microsoft owns a large stake in ChatGPT, which is why we've seen Microsoft stock completely skyrocket and stay very, very high. There was no huge pullback because Microsoft, the investors are understanding that ChatGPT and AI is the future of technology, right? 5 days ago, basically, Google released its own AI-like tool, similar to what Microsoft has with ChatGPT. As we know, Microsoft owns Bing as well, which is another chat engine or search engine, sorry. And Google obviously owns Google. Right? So this has essentially become a battle of search engines, essentially. And currently, Google needed to respond. So Google responded with their own, which is called Bard. And Bard is apparently much better than ChatGPT. And they're also looking to integrate Bard into Google's search engine. So as we can see, over the past few days, Google stock is up over 10% here. Okay. So obviously this is very, very bullish for the tech sector, given the fact that Google and Microsoft are trillion-dollar companies and they're maintaining their price high. So we've skyrocketed up on Google and Microsoft, but there hasn't been any major pullbacks to a point of profit taking and a dip buying opportunity. So that in and of itself is extremely, extremely bearish for the tech sector. And because it's extremely bearish for the tech sector, that means the SP 500, right? So as we can see, this is Google on a daily chart. You can see that this is the upper level of the Bollinger Band. And clearly, ladies and gentlemen, you can see that this is very, very overextended. So, we skyrocketed up, and generally when we're trading this far outside of the upper or the lower level of the Bollinger Band, it shows extreme algorithmic overextension. Generally, we should be pulling back, but because this is very, very bullish news according to the stock price and the bottom line of the company, as well as this is a very innovative technology for the future, we have not yet seen a clean breakdown and retest as we have time and time again in the past. So Google clearly showing a lot of strength. Microsoft, we already know, is also showing a lot of strength. We've also, similar to what Google did in the early last few days, we skyrocketed on Microsoft. It became very overextended to the upside in terms of the Bollinger Bands, and we held. We didn't fall down. We didn't go anywhere. We didn't pull back, give people an opportunity to buy cheaper, nothing. So Microsoft and Google are essentially holding up the tech sector. This is showing a lot of strength, primarily due to Microsoft and Google. And that, in my opinion, is not good enough. So I wanted to give you guys the landscape of what was going on in the AI. So I wanted to explain what was happening with Microsoft and Google. They're having a battle between Bard and ChatGPT for integrating into their search engines. So people can type in whatever they want and the AIs will generate an answer for them. And that is keeping the market up. But as you know, we ended up going short while this was happening. Why was that? So one of the concepts that's very important to understand was talked about in this book called Reminiscence of a Stock Operator. It was written in the 1920s, and it's one of the all-time best trader psychology books and just a book in general to understand market dynamics. ever written in history. So in this book, he talks about, so basically it's talking about someone who's a very, very successful trader. So, and his thoughts on Wall Street and trading in general. So in this book, he explains that when the best performing stocks, so everything could be in an uptrend, right? Everything could be very, very bullish. We can be rising upwards and being very, very bullish. Cool. But once you start seeing the best performing stocks show weakness, that is the first signs of an uptrend stopping. Okay? Let me repeat that. When you see the best performing stocks starting to show weakness, that is a sign of a potential reversal in trend, and we have to take that into consideration. This was talked about in the 1920s. So let me show you guys an example. So once again, all throughout the past few months, the chips have been the best performing stocks in the tech sector. The chips were the strongest. Nvidia was super, super strong, right? So we've clearly been in an uptrend with everything. But what his thinking was is that when the best performing stocks, i.e. Nvidia for this example, starts to show weakness, that is a telltale sign that the upward momentum in the overall price action is not going to sustain itself. So because I saw weakness in Nvidia, while Microsoft and Google were skyrocketing, this weakness in the chip sector made me really, really confident in starting to go short, because the biggest winners started to show weakness, as he was talking about in the book, right? So more specifically, what we did was, as you can see, AMD was also very, very strong. But more specifically, what we did was I went short AMD. So we went short AMD on this candle here on May 10th. And I explained that regardless, we could continue falling, we could continue going up higher, but this was a very good opportunity to go short with a 15% stop loss. Okay. And the reason for that, and the reason for me entering, right, was that AMD, as you can see, was very, very overextended to the upside in terms of the Bollinger Band. Okay, so this was going on while Nvidia was showing weakness. So number one, AMD, very, very overextended to the upside in terms of the Bollinger Band. Number two, this candle here was not a bullish candle. It is generally a very, very strong sign of a reversal candle. This is not a bullish candle at all. All right. Number three, probably one of the most important, is that AMD went up over 22% in 6 days. So it shot up 22% in 6 days. Nvidia was not showing strength. We're very overextended to the upside in terms of the Bollinger Band. And this is not a bullish candle. So that's four major reasons and four easy, give me reasons for the trade on AMD. And I said that my target was going to be $94 to $95 to the downside. And we ended up hitting a low of $93.68. So we hit well below my target, because my target was down here at 94 to 95. We ended up breaking below the target, and the trade ended up working really, really well. For these very, very easy and safe contracts, we bought option puts, and these were up over 40% at the time, and they worked out really, really well. So this was not the only trade that we took. I was very, very confident in going short because I saw weakness in the chips, right? But because I also saw weakness in the chips, I also saw weakness in the price action of the S&P 500 itself. So we also went short on the S&P 500. So now let's go ahead and talk about that. All right, so this is the chart of the S&P 500 on a 5-minute chart, okay? And on Thursday, I was showing how the S&P 500 was creating a rising wedge. And rising wedges are extremely bearish patterns that often break to the downside. All right. So heading into Friday, I was saying, because we initially went short at the close on Thursday, right? We bought into 405 puts on the SPY, and these ended up doing really, really well. And my thought process heading into Friday, right, because we went short Thursday, my thought process heading into Friday was we are going to retest between 413.50 to 414, and that is going to be another amazing opportunity if we gap up to go short. So this is a 5-minute chart. You can clearly see this is a rising wedge. We were showing weakness, and we ended up going exactly to that level as resistance, this 413.50 area. And what we ended up doing was we went short on the 1-minute chart. We absolutely caught this entire move to the downside very, very perfectly. And within a few minutes, these contracts were up over 60%. So this was literally within 10 minutes of the trade. The contracts very, very easily skyrocketed down. And we were short the entire day. We were short AMD. And towards the bottom of this move down, the contracts were up hundreds of percent. And it just worked out really, really well. So the point is that the tech sector was only being held up by the chips and by the chips and by AI stocks. So once we saw the AI stocks basically were not really skyrocketing as much, and they were very overextended to the upside. So if the AI stocks are not completely bullish, then that is bearish, because the only way for a move that is crazy and psychopathically bullish is if it continues to be very, very bullish. If it starts to even itself out and flatten, that's not bullish. That is actually bearish and not good. Okay. Number two, the chips. Similar to AI, the chips needed to continue showing strength as well. But we saw clear-cut weakness out of NVIDIA and AMD. And those were reversal signals. So because I saw the weakness and staggering in AI and the chips, and because we saw the bullish patterns, the bearish patterns play out on the SPY, on the smaller time frames, all of those things combined made it very, very easy and simple to have a bearish bias in the past few days. When you have these reasons adding up and just being very, very when you have more and multiple reasons to back up your claims for a trade, it makes it so much easier. So that's essentially the thought process on this. On the shorter time frame, let's take a look at the larger time frame now. So first of all, this is clear cut. Just another main beautiful reason why we were also short is because the NASDAQ was creating another rising wedge on a daily chart. This is the daily chart of the NASDAQ. The top 100 tech stocks, right? This is creating a rising wedge pattern. Rising wedges are extremely bearish and often tend to break to the downside. Well, what was happening? We were creating a rising wedge on the 5-minute chart of the SPY, and we've also created a rising wedge on the daily. So not only were the AI stocks starting to stagger, the chips were starting to show weakness and not break to the upside, but the NASDAQ is at the top range of this rising wedge pattern. So multiple beautiful, easy reasons to just go short. And we caught the top absolutely perfectly. We simply just kept it very, very simple. We went short alongside this trend line. We were very patient. We didn't try to short too early, needlessly. And worked out really, really well. So this was clearly just another absolutely perfect reason to go short on the NASDAQ. The level that needs to break to the downside now moving forward is 321.75. That's going to be Monday's support zone for the lower point of this rising wedge, which needs to essentially hold if bulls want to reclaim and bounce up. But anything below 320, then this is going to be very, very difficult to maintain itself. But then below 320 on the NASDAQ, then we have to hold 318. 317.50, 318 area. But so far, we're in the clear. We went short at a very, very beautiful time on Thursday, and we made a lot of money doing that, which was great. All right, so that's the chart on the NASDAQ for the daily. I also want to show the SPY. So remember, my thought process was on Thursday, this is failing to really, this is verbatim, exactly what I was saying. The SPY is failing to comfortably break above and hold above 412. So this was the candle that we went short on. And based off of the 5-minute of the shorter time frame analysis that I had, I was explaining that the SPY could end up retesting 413.50 to 414 and then falling from there. And I said Friday would be a day where the market can really fall dramatically to the downside. And it worked out perfectly. We gapped up. Gapping up was the best case scenario for us. It was the easiest reason to be short. And we went short. And our 405 puts did really well. Our intraday scalp puts did really well. And our AMD puts did really well based off of this setup. So now moving forward, obviously we can see that the NASDAQ needs to hold 320 and the 318 area, right? The SPY, this is clearly not a bullish setup at all. What could end up happening now on the SPY is it could have a neutral day, but it needs to break and close comfortably above 413 to reclaim some of its bullishness. So the only way that I can see something bullish happening on the SPY is we need to break pretty cleanly above 413. Ideally, we should be breaking above 414. But if we can break above 414 on the SPY, then this candle, in my opinion, would just be a massive bear trap. Because 414 on the SPY is also basically coinciding with this downtrend. So if we can close above it, then that would be very bullish. And this would also reclaim the bullish momentum back to the upside and everything, right? But of course, if we don't, then the bearish momentum is going to really just push down on the SPY, and we can end up really falling very dramatically. And at the moment, the momentum is bearish. It is currently paying to lean short whenever we have these pops, given the fact that the NASDAQ hit resistance, the chips are showing resistance, and the AI stocks are starting to show stagnation. We're gonna have to see some strength out of the SPY before we can be extremely bullish, right? Because as you know, constantly there has been constant resistance at this 418 to 420 zone on the SPY. And in my opinion, the only way that they can really break this up above 420 is they need to make people very bearish first. So I don't think people are bearish enough. They want to keep retail sidelined enough so that people will think that the market is, people just need to be very convinced that the market is going to fall. Once more and more people are convinced that the market is going to fall, that's generally when they rip it to the upside. This is not really the worst. It can still like hold bullishly and, you know, reclaim as long as we have more bullish buying pressure. But in general, I'm just keeping it simple. All of these things were just really easy opportunities to just go short. We made our money on Friday, but now moving forward, we have to take things one day at a time. 414 is that important level on the SPY. And if we don't break above that, then once again, we can easily break below 408 into the early days of next week. So by Monday, Tuesday, by Tuesday, maybe, Tuesday, Wednesday, we can end up breaking below 408 if this is actually going to be bearish. But aside from that, this is going to be a very fun week. We caught the movements so far pretty perfectly. And now moving forward, we're just going to have to watch how the top performing stocks perform now, and what ends up happening with, you know, the entire banking sector, with the rest of the tech stocks. And next, we also have to take a look at the dollar. So the dollar was also just another reason why I was extremely bearish on the market. It was just another easy, clear-cut reason why. All right, and just real quick before we go over the dollar, I just want to explain, we went short Thursday. This trend line on the SPX, which coincides with the SPY, obviously, was a trend line from back in December 2009. And we are on Thursday right here on this candle. We were clearly failing to really close above it. So that was clearly just very easy, just another reason to just add to our toolbox of reasons to go short. But then the other reason was the dollar, right? So very clearly, we know that the dollar has an inverse relationship to the market generally. If the dollar is going up, then the stock market should be falling lower. So clearly on Thursday, we saw the dollar make a very dramatic bullish candle here, right? Very bullish. When you zoom out on the dollar, we've already been seeing the dollar getting beaten down. We know all of the news about how many countries are in the process of trying to de-dollarize their currency and basically the de-dollarization. So we've been beaten down here, right? And this looked to me like a very interesting point for a bottom, and especially for a bounce. And if we bounced in the dollar, that would mean that the stock market should fall. So that was just another easy, beautiful reason to go short. So everything still looks like it could still fall, right? But the main thing that we need to see is if the SPY can completely break and hold above levels of resistance. Honestly, that 415 level on the SPY is still going to be very important to break to the upside. And once, even if we were to break above 415, right, this downtrend is going to act as support. So we're going to end up retesting back down to 411 to 412. So then, it can be very messy for the next few days. And then we also have Fed Powell speaking on Friday. So he's speaking as well. So if the Fed or someone alludes to any sort of chance that we're going to continue increasing rates, then the market is going to really take a hit. So this, very important. We're going to have to see how this turns out on Friday at 11 a.m. But moving forward, Monday, 8:30 a.m., we have some news coming out. And then Tuesday morning at 8:30 a.m., we also have some news coming out. So this week, in terms of intraday trading, should be pretty simple because there's no news coming out during the day. But aside from that, things look pretty bearish. And we need to see a break to the upside for a change. So, for a change in momentum. So overall, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. I go live on Twitch and YouTube. I share all of my trades live completely for free. I'm going to post my Twitch link in the channel description. If you guys are also interested, please make sure to join the Discord group where I talk about all of my trades and thought process as well. So I hope you guys enjoyed. Please show your love and support. Thank you so much, and have an amazing Sunday. Thank you.